Going on, and good afternoon, Wealth Our Way Nation. It is your man, Charles Tank Harris, the founder and chief visionary officer of the financial literacy platform, Wealth Our Way, where our motto is wealth is not only for the wealthy. I welcome each and every one of you to episode 64, how to determine how much life insurance one needs. Want to apologize for the technical difficulties yesterday. I got instant feedback that the screen share was not working, which is why we are going to revisit this topic and as a bonus, go deeper into it today. So let me start by welcoming each and every one of you who are live with me as I stream across the Wealth Our Way Facebook and YouTube pages. Give my heartfelt salute, shout out to Wealth Our Way Nation members who watch this program overnight, pre-recorded over the weekend, wherever they can squeeze 15 minutes of financial literacy in. And then the heartfelt, how are you, covering up the polo sign for my Life 101 platform members who who listen to the audio recording of this very here program. So yesterday, we were taking a dive into the differences between a life insurance agent and a life insurance broker. I believe we beat that up. I didn't see a lot of comments or questions about the differences between the two. So we moved into the second part of what we were talking about yesterday, which was determining how much life insurance someone needs. And I screen shared, or I attempted to screen share. I saw the screen share. You cats weren't seeing it. I saw the screen share for this fabulous website called lifehappens.org. I want you guys to definitely, I'm going to put it in the comments right now. Do it like that. Lifehappens.org. You guys got to check out lifehappens.org. It's a nonprofit website dedicated to teaching people about insurance, mainly life insurance, but they also teach you about disability insurance, long-term care insurance. The website is bananas. The thing I like most about it, like Big Tank and Wealth Our Way, they have no profit motive to teaching you about insurance. They're not associated with a particular firm. They are just trying to get you to understand the importance of having insurance. So I highly recommend lifehappens.org. Today, I'm going to screen share with you correctly from lifehappens.org and determine your actual life value. That is something that I've experienced. And once again, I go back and forth talking about the broad financial markets as I know them, and then talking about things that happen in the African American community, which I grew up in and am especially sensitive to. The teaching of someone as to what they are worth financially, what their obligations are, what responsibilities they leave behind if they were to meet an untimely demise is an eye-opening experience. When you start telling people that they need $1 million, $2 million, $5 million of insurance, especially if you're an insurance salesman, they think that you are gaming them. They think that you are only telling them that because you benefit from it. And the reality is that no, you happen to be worth that much money. I had an exam. I'm gonna take my glasses off because I'm seeing the glare and I don't like it. And I'm handsome and I just want you guys to see all the face. So with that being said, when you think about yourself as an income producing entity, I was given an example one day. Somebody asked me, Tank, if you had a machine in your basement that when plugged in and working properly, it spit out a certain amount of money every year. Let's say the amount of money was $300,000. You keep this machine plugged in and running properly, it'll spit out $300,000. How much money would you spend to make sure that machine keeps doing its job? And of course, the answer is some function of this 300,000 in perpetuity. Like if it's going to spit this out every year for the next 20 years, that's $6 million. I'd spend $1 million to make sure that this $6 million keeps coming. You can't pretty much give me a number that I would think is too high. And the person said, well, you're that machine. You are making X number of dollars from now until you retire. You have to put a mechanism in place to make sure that that machine is going to keep spitting out money, even if you're unable to get out of bed and go to work. Talk about disability insurance. Or if you die early, talk about life insurance. So what I want to spend today doing is going through some real examples of what it would mean to your family if you weren't around to financially provide for them. That is called doing a human life valuation, just actually figuring out how much money you're going to make. And there's some things in here that we won't get into. Let me just say, I try to keep it very high level here. I'm not going to adjust it for inflation. I'm not going to adjust it for the fact that we get raises every year. Most of us get a raise every year. So with that in mind, I want you to realize that the number I'm giving you is actually low. So when you see this big number, it's actually going to be low from what you need, because I'm going to base it on whatever salary we're starting at today, not taking in consideration that most people get what's called a COLA, a cost of living adjustment every year on their salary of 2 or 3%. Some people get bonuses, performance raises. Not taking any of that into consideration. We're just going to take the salary today and extrapolate it out to a number in the future. So with that being said, let's go to the screen share. I'm gonna stop right here and have you good people tell me, do you guys give me a thumbs up if they see Kelly Rowland's beautiful face right now? I just wait for the thumbs up. Delroy, Ariane, one of my faithful Wild Nation participants, Renee. If you see it, if you don't see it, tell me you don't see it. Before I go through the whole screen share, boom, we're good. Okay, now, do you still see it? Okay, if we still see it, because I've now had to go to that screen so I can move. All right, so we see it. We're now going to use the calculator right across the top of the Life Happens org website are green highlight things for you to go. You can choose a company, you can choose an agent, you can learn about scholarships, you can calculate what your human life value is, what your life insurance needs are. So let's go with the life insurance needs. And here this tells us what we're going to need. This is what I was attempting to show you guys yesterday that didn't quite work out. So the first question it asks you is, how much annual income would you like to provide if you were no longer here? So they give you a formula. Everybody's not going to agree with this formula. I actually don't agree with this formula, but it's not a function of whether I agree with you or not, with them or not. It's somewhere to start from. These are financial conversations are best had with professionals, whether you're using a financial planning firm like Wealth Our Way or talking to someone else. Your individual needs are going to differ from broad-based information that you're getting. And this is broad-based information, but they're giving us a skeleton, a starting point. So let's go with it. They say you want to have 60 to 80% of your post-tax income. So yesterday I used a person making 100 grand. 100 grand, let's say you have an effective tax rate of 20%, with your federal, state, local, all of that in there. So you're looking at bringing home after tax $80,000. And they want you to use a number of 60 to 80% of that $80,000. If we cut 60 to 80 in the middle, that's 70%. 70% of $80,000 is $56,000. So that's the number we're putting here. We're going to want to provide an annual income equivalent of $56,000. They tell us not to include the big ticket items, debts, child care savings that we want to pay off immediately. They just say we want to replace our income. So go next. How many years should this be provided? Another great question. I tell people to look at it one of two ways. Take their age today, subtract their retirement age from the age today, or subtract their age today from their retirement age, and it's that number of years. If you have a mortgage, you can use that number of years. If you have a child, this is the one I like to use. I want whoever is going to be dependent upon my income, I want to take my income out the number of years that they would be dependent upon it. So for me, my youngest child is 13. My stepdaughter is 11. So my stepdaughter going from 11 to the year I would anticipate her graduating from college, which would be roughly 23, that's 12 years. Is 12 years shorter or longer than how long I expect to make money? Well, if I'm looking at my retirement age of 67 and I'm 51, that's 16 years. So 16 years versus 12 years, I'm going to use the bigger number. I'm going to use 16 years. So 16 years. And then is there anything I want to pay off immediately? Let's say I had some student loans, some credit card balances, car loans, mortgages. I'm going to use a number like 250,000. This is not necessarily my situation, but I'm just using a number. What I like to provide for childcare, if you pass away and someone else is going to be responsible for your kids, your wife or your husband, your cousin, your guardian, whoever, they are going to have to be able to pay people to be there for your child in a way you weren't. But I'm not going to provide a child care number. There is a link here called care.com, which will estimate what that number should be. I'll let you guys do that on your own. How many children require college funding? Yesterday I skipped that, but today I'm going to add one. One child who's 11. We're going to say that they're going to go to a public university. What state do I live in? We're going to use New Jersey. And we're going to hit next. Would you like to set aside an emergency fund? Sure. Let's say 6 months of my take-home pay of $58,000. Half of 58 is 29. Oops. Next. Do I have any insurance? So in this instance, I'm going to talk to you guys who have a job. Most of your jobs may offer 2 or 3 times your salary. We're using a person that makes 100 grand. So let's go with 2 to 3 times their salary. Let's go with 2 times and say your job insurance is going to give you this. I don't normally factor job insurance in because job insurance sucks if you quit. There's a lot of reasons you don't get job insurance. So let's look at what ended up coming out as our figure. Replacing my income was $777,674. Paying off my debts was $250. I didn't include childcare, but college was $146,620. Emergency fund was $29. The cost of burying me was $20. And I have $200,000 of work insurance. So I need $1 million of coverage. There are several ways. And then this actually will let you download this form or email your results to somebody. That's why it's such a great tool. So let's come out of here and go back to just the StreamYard with me. So first of all, somebody shot in the comments that they were able to see everything that I covered. I want to make sure that happened. Renee, if you could let me know. So when you're determining what your need of life insurance is, you want to, and tomorrow we're going to talk about the difference between term insurance and permanent insurance. This calculation today was very much a term calculation, very much what I need in pure straight insurance dollars. If something happens to me, I used to tell people when I worked in insurance, I cannot replace the love, the time, the specialness that the person who I'm talking about insuring is that void that they're going to create when they die. I can't replace that. Nobody can replace that. What I can do is make it like their paycheck, their money, their human capital value to this family never stopped. I can make it so you continue to live in the same house you've always lived in. I can make it so you continue to go to the same school, hang out with the same friends. I can make that horrible, horrible time in your life be a little less horrible by keeping the financial consistency there. That's what insurance is supposed to do. Don't let someone sell you more than you need or less than you need. Ironically, I see now as a planner when I'm reviewing people's insurance, and we do review insurance at Wealth Our Way, when I see the insurance that people get, a lot of times I'll see somebody underinsured because an agent wanted to sell them a whole life policy, and all they could afford in whole life was $25,000 the face amount when they needed $1 million of coverage. But $1 million of term insurance would have given a lower premium than the $25,000 of whole life. And the agent or the broker wanted to make more money, so they sold whole life. It's criminal when I see that. So people have those bad experiences and then think insurance in general is the problem. Insurance isn't the problem. The cat you talked to was the problem. So with that being said, I hope that gives you a better example. Please visit lifehappens.org. They didn't pay me to tell you this. It's just where you should go to get unbiased, independent figures. And then always, of course, holla at your boy Big Tank at wealthourway.com. I look forward to seeing you guys tomorrow, where we will talk about the differences between term insurance I'm back. I don't know what happened. I don't. If half of you cats left, I apologize. But please remember our motto here at Wealth Our Way. Wealth is not only for the wealthy. You guys take care. I'll see you tomorrow.